Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, February 24, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? We had what's called a gap and crap situation where the market had a gap higher opening, ultimately crapped out, finished near the lows of the day. That qualifies a gap and crap situation. And we also had from Friday's big time down day what's called in the trading parlance follow through. Let's get a snapshot from the big picture perspective before we go any farther. The weekly chart is coming into its weekly 20 period moving average. Now they've already been through this over here in January, early to mid-January. They touched it in early February. And here we are again. How long is it going to hold? How much will they ride the 20-period moving average? Or will they breach, another technical term, will they breach the 20-period moving average on the downside? And we're coming to the close of the month. Is then a material change on the monthly chart other than the fact that they're extended from home base? There's no material change. They're eating time off the clock on the monthly chart, going sideways. So unless the month of February, by the end of this week on Friday, closes in a lot different position, in a much different position than they are today, there's going to be no material change on the monthly chart. So back to the daily, what do we have? We have follow through. We have below the 50 period moving average. Again, we go with moving averages on a first time, best time situation. What does that mean? It means when you come into a moving average from afar, the first time you get there is the best time for a bounce or a reaction, or for that moving average to be support or resistance, depending on which way you're coming into it, from above or from below. Well, in this case, we touched the 50 period moving average and been back and forth through it many times. So it has less significance on the daily chart than if it was the first time where they spiked it and ripped it back up. And you can even see back here in October, hit the 50 period moving average, haven't been there in a lot of time, then they ripped it back up. So you see how that works. So they've been back and forth through it, which what does is it diminishes the importance of said moving average. Here's where you want to write this down. What's the next most important thing on the chart on the downside? What are traders in the live room and inside the numbers going to be eyeballing if we wake up to a down tape tomorrow? Where is that opportunity going to reside, depending on where they open the tape and what they're doing in the morning? Well, you got a couple of things going on. You have a pivot low there. You have another pivot low there. That was a test of the first pivot low. So pivot low, rally, test, rally away. Here we are again. Is this going to hold, or are they going to get into what's called no man's land? Let me draw it out a different way so we can identify no man's land. This area here is the entrance to no man's land where there's a gap down below. Now there's a lot of space in here, and they don't have to get all the way down to the gap in one bite. But this, under normal garden variety conditions, if visited, if capital I, capital F, if visited, is a bull-bear battle type situational place. What about the lazy swing trader automagical algo system? 3 trades, not 1, not 2, but 3 trades triggered more profit targets today. We had a short trade on the board, and that bodes well for the market that's going in the southern direction. We had an entry alert up here. We had a profit target hit today. Profit target alert went out early this morning to members via email and text. Obviously, they know the profit target ahead of time. It's just an alert, meaning an awareness that, yes, it hit its profit target today. It's a reminder. It's now a risk-free, emotionless trade. Qualcomm. How about J&J, Johnson & Johnson? This is what we call the money rotation trade. Market's going down, money rotates into stuff like J&J, and the next one you're going to see, how does the lazy swing trader automagical algo system know? It just knows. It's an algorithm. It's my proprietary algorithm. you can see all the trades that triggered profit targets. It's what we call a bonanza. Entry alert at the lows, profit target at 164.30 today. That was not quite the high a day, but pretty close to high a day. How does it know? Here's another money rotation trade. Household items, Kimberly-Clark. We had a profit target today alert near the highs. Entry alert down here at 126.09. This is another money rotation trade. Market's pulling back. These stocks that are household names, these are called consumer staples. This is where money rotates. This is where money goes to hide when the market goes down a little bit. How does the system know? It's a do-it-for-you system. Entry alerts, watch list, everybody knows what's coming. The alert comes in text and email. The active trade list is populated with profit targets, risk management, stop alerts, all that stuff. Everything you need to be successful in the swing trading world. Lazy swing trader, automagical algo system. 3 more profit targets hit today. Get on board sooner than later. What about inside the numbers? What was going on over there? We had some early numbers on the board, but everything changed as we got closer to the opening bell. We're going to focus on 602.15 for a second. You could see where the market opened up right around 602.15, sold off, tried to rally back to it. Let's see what other numbers came out on the board. So we scroll up a little bit and we find out what's the scoop today. The pivot is higher. We don't need that one anymore. We had 602.15. Then we had the thieves in the morning at 9:07. They showed up, working their way down to 602.15. It's important. Above opens the door to the pivot. But what does below do? Below opens the door for 600, give or take. Doesn't mean they have to get there in one bite, but they can get there, 600. What was 600? It's a gap. Doesn't mean there's a bounce at the gap every time. We talked about this in the live room today. Everybody knows about the gap. We want to buy a price or a zone that not everybody knows about. That's our best opportunity. We want to buy the place where traders that were already long are throwing up the market because they think it's wrong. It was wrong for them. For us, it was right. Where is that place? Well, we're going to see that place right here. 951, below the gap, around 600, opens the door for a leg down toward 597.80 to 596.35 zone. It's a bounce back in the other direction zone. Then 1004, you could see they're in the showtime zone. There's your zone. Got a nice bounce out of that zone. The retest, higher low, essentially picked off low of day. How you doing? How many times do you see that inside the numbers? You see it pretty often. Pause the video. I'm highlighting the important stuff. It's all in here. Exit targets, everything you need to be successful trading the S&P during the trading day in the morning session. Whether you're trading options, futures, options on futures, micro contracts, exchange traded products. I don't really care what it is. This is their directional trades in the S&P. We had 2 stocks on the move, Unity Software and WDC, aka Western Digital. Unity didn't hit its number, but let's take a look at these charts anyway. As you can see, Unity getting a buzz cut at the open, and they came close. The low was 26.32 against my number at 26.27. It's within the orb of splitting hairs over pennies. Therefore, the numbers work. Now, what's going on over in Camp IWM? So Friday, they came and closed underneath the 200 period moving average. Today, we had follow through just like the spiders. They were down 0.7% against the spiders that were down less than 0.5%. So we have relative weakness against the spiders in my favorite market leading indicator. That's something of importance, so we'll note that. And here you have an important pivot low, so we'll demark that. What happens if they get below this important pivot low? Well, you go over here to the left and you say, well, look, this is the same place essentially, and this is a bull-bear battle type of place, but they've already been there. So if they spike this place, it's going to open the door for a gap. And then if there's a number below the gap, we're going to be buyers there, and that's a live room. slash inside the number situation. How? Because we have the table of numbers for inside the number members and live room members. The dozen markets that we cover, the IWM or small cap space happens to be one of them. 50 period moving average on the weekly chart. Here they are. It's a long week, but you have the last breakup candle low in the sequence. Are they going to hold that, or are they going to get below and close below it this week? We're watching that this week. We'll likely talk about that each and every day this week leading into the end of the week. Are they going to try and recapture the daily chart 200 period moving average? And you know what the jingle is. Below all the moving averages, the trend is your friend until she throws your shit out the window. What about the folks down at the transportation department? Same routine. Second favorite market leading indicator. Also relative weakness against the SPY, giving up the last moving average in the line of defense. Let me remind you, looking at the weekly chart, let's focus on this. Last breakdown candle high in the sequence. She tried to recapture it, couldn't do it. Tried once, twice, three, we'll call it 4 or 5 times. Couldn't do it. Sold off. This creates, now let's get rid of this line, and we could say this creates a bearish box. It's kind of like a bearish flaggish situation where you have the flagpole down from the highs. This is your flag. It's a box. It's a flag. It's a whatever you want to call it. And generally speaking, you're going to get an ensuing move to the downside. That's what's going on in the DJT. It's my second favorite market leading indicator, a number one canary in the coal mine. Write that down, put it on a sticky note. What about the Q people giving up the 50 period moving average today on the daily chart? Big picture, where are they from a weekly perspective? Maybe they're just coming in to run a test of the weekly 20 period moving average or home base. They never like to get too far from home base. Just a week ago at the high, they were starting to get a little bit extended from home base. Each and every time that happens, what happens? They come back toward home base. Garden variety stuff. I show it all the time. Finishing on the lows of day is not a positive sign leading into the next day. However, we do have turnaround Tuesday. Could get a DCB, dead cat bounce. They tried one today. We had the gap and crap situation, a la follow through. Remember, we're looking for a February-March low. It's toward the end of February. Market's trading down. We're looking for a February-March low. Been saying it since the fourth quarter of last year. How you doing? How do we know that? It was taught, explained, and presented in real time during the MSF Masterclass series. It's still one of the modules, Cycles module, 2025 forecast, and beyond. We teach you how to get the Cycles forecast for each and every year and give you the tools required. How you doing? How do you like dem apples? MSF Masterclass, worth its weight in gold, another golden ticket situation. Any material change for the financials? We're up 22 cents today, bucking the trend a little bit, up 0.4%. Nothing really materially changing on the chart since Friday. They just were up 22 cents. So we're going to take that at face value and move it along. Because we have something much more interesting in the SMH or smash mouth, getting below all the moving averages once again in one fell swoop today. Bad day on Friday, bad day today. They never were able to get to this gap up here. They collapse back down. Sometimes they come up short. Other times they spike them through. What we would have said in the live room was, look, they like to screw two factions of traders when it comes to these kind of things, like gaps, for example. There are traders that are riding this long looking to exit at the gap. There are traders that are looking to short the gap. If they come up short of the gap, they screw two factions of traders. Those looking to exit at the gap, those looking to enter at the gap, and here they are just 3 days removed from coming up short of the gap, considerably lower, giving up all the moving averages. And here's that jingle again. Below all the moving averages, the trend is your friend. It's a negative situation. The trend is your friend until it's not. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.